Jason, I like your background, man. All right, so it's Tuesday, 6:30 p.m. Today is September 15th. We're doing our VA home buying workshop, and it looks like there's going to be a small group of us. But the reason why I wanted to do this is because we've done VA workshops before, and it's kind of incredible. I guess, number one, the lack of information that VA buyers have, anyone with VA benefits, and the misinformation out there. I was at the barbershop the other day, and my barber says, "Hey, Voltaire, quick question. This is my friend. He has VA benefits, but he says that he doesn't want to buy a house because he's not married yet, and you need to be married to be able to qualify for a VA." And I go, "No, that's not accurate. You don't have to be married to use your VA home buying benefit." So, I talked to him and just gave him some more information. But again, to me, I was very surprised by that comment, because here's a service member who's active duty, and he believes he needs to be married in order to buy a home VA. So anyhow, that's why we're having this workshop. Welcome everyone who just joined. So we're lucky to have Jason Wood today, VA loan guy, as you can see in his background. He's gonna break down the VA benefits, maybe answer some questions. I'm sure he's gonna talk about the BAH, about the benefits of VA loans, no mortgage insurance, no down payment, low interest, and so on and so forth. So welcome, Jason.
Thanks, Voltaire. I appreciate it, man. Yeah, so we're gonna launch into all of this stuff. And just to begin, a little about me. So I'm an Air Force veteran, and I've been in the lending business since 2001. So I've helped a little over 1,100 families with their home loan, and VA loans are my language of love. That's what I prefer to do, is help our military and our veterans, own a piece of this land that they raise their right hand and offer their life for. I think it's our duty to help educate the mortgage industry, the real estate industry, and also just consumers at large about the VA loan. I think, maybe a little bit biased, but I think really the VA loan is the best financing product out there for buying a house. So
that's a fact. That's not even being biased. That's a fact.
Yeah. So so a couple things. I'll go here. Can I share my screen, Voltaire?
Yes, you may. Let's see if I need to give you any sharing permissions here. Give me a sec. Yeah, give me a second here. Here you are. All right, there you have sharing permissions now.
All right, cool. There we go. All right, can you guys see that?
Yep, we can see it.
Okay. All right, cool. All right, so let's dig into it a little bit here. The best thing, and the thing that the VA loan is the most known for, is the fact that there's no down payment. There's also no mortgage insurance. So
we're looking at your email right now.
Oh.
Yeah.
There we go.
There you go.
So there's no mortgage insurance, which is a really cool thing, because I think a lot of times people will hear, well, I need to save up for a 20% down payment, which is a lot of money, right? And with VA you don't have to, but with other loan types you don't have to either. But when you don't, then you incur this thing that's called mortgage insurance, which is not a benefit to you, it's just an added fee, and it protects the lender. So with VA, there's no mortgage insurance, which is a huge, huge plus. So it allows you to to jump into the real estate market a lot sooner than you might have anticipated because of trying to save up for a down payment of any size. So the average mortgage insurance cost kind of nationwide is $150 a month. And going VA, because you don't have to pay that, that automatically gives you a boost of about $30,000 in purchase power. So you're already able to jump into something that's a little bit nicer home, a little bit higher value.
Yeah, and just if I may interrupt on that, that's nationwide, $150. The average home, it says right there, $250. So we're in San Diego. I just did an analysis last week, and the average home in San Diego is about $950,000, which is crazy to me, just because last year, and it's always been for the last couple of years, it's been in the 600,000 range. So it jumped up the average to 900 some change. The median is still in the 600s, but it's just so that $150 doesn't even do it justice, because I'm sure, Jason, you're probably like, what is it, like $200-300 maybe that they would be able to save?
Probably closer to 300, yeah. So I mean, that's easily 60 to 100K more in purchase power, just by using a VA loan compared to any of the others. So it's really pretty cool. And the other thing that's awesome about the VA loan is it's not like a one and done loan program. And that's a misconception. A lot of people think, well, I can only use it once, so I'm going to save it for the big house. And that's not true. You can use the VA loan over and over again. In fact, you can have multiple VA loans going at one time. There's a lot of math that comes into that and a little bit of strategy in order to make that happen, but it's absolutely possible. I have a couple of clients that have 3 active VA loans right now, 1 on the home they're living in and 2 on homes they used to live in that they now made into rental properties. So the VA loan is really versatile. You can use it over and over again. You can sell a house, buy another house, go VA again, so on and so forth. So it's really versatile. The way that we kind of structure that, in a sense, is it kind of depends on your career projection. And the military is probably the best path for being able to really leverage real estate and use that VA loan, because you're forced to move every 3 to 5 years. The average, citizen, civilian, they're going to be locked down in their same city for 5, 10, 15 years. They're not going to move anywhere, right? In the military, we move all the time. So it's every time you move somewhere, you need a place to live. And of course, you can select base housing, but the smart money is to buy real estate, right? And you can use this awesome loan and go zero down. And so, we help a lot with strategy and stuff on making sure that we're not, going too overboard because you're in San Diego, and then that prevents you from using your next VA loan at the next duty station. So, we tailor it the right way so that you have that leverage and that ability to start picking up real estate as you go along. I mean, there's no reason why if you did a 20-year military career, by the time you retired, that you couldn't have $1 million in real estate built up over that time, and probably have 1 or 2 of those houses paid free and clear by then. So there really is some good strategy to really develop wealth, and being in the military is the prime way to do it.
Yeah, I think that's an excellent point you just covered, because a lot of the property owners in Coronado, they were stationed in Coronado, so they just bought in Coronado years ago, 30 plus years ago, and they have these $1 million homes. So, and a lot of the clients that I have that have multiple properties, they started with VA. They just bought instead of rented, and it worked out. So that's a good.
Yeah, and it's really cool. I mean, we'll get into the property types here too, but there's some neat strategies that we employ with it. But once you have your VA eligibility, it never goes away. So if you served 20 or 30 or 50 years ago, you still have VA eligibility. So VA eligibility is determined by the length of time that you've served. And so in the current era that we're in right now, you have to have served at least 90 days in your unit. So what that means is, technically right now we're still declared by DOD at a time of war. So in a time of war, you need to have served 90 days with your unit active duty, which means basic training doesn't count. Your MOS or your H school doesn't count either. It's when you're done with all that stuff and you report to your unit, you're actually doing the job you've been training for. So once you've done it for 90 days, boom, you're eligible. If they ever change it back to, the time of peace, then that 90 days just changes to 181. So you go from 3 months to 6 months, basically. So it's not a huge wait period, but that's how it shifts. It's really important that, there's like some schools, like the Navy Nuclear Propulsion School, that's a 2-year school. So you go to basic, and then you go to that school, and when you're done with that school, you've been in the military over 2 years, but you're not eligible for your VA loan just yet. Then you got to go do the job for 90 days. To check if you're eligible, if you're a veteran, we use your DD 214, right? So that's your discharge paperwork. It shows when you served and all that. I have access to online portal through the VA, so I can pull certificates of eligibility electronically. So it's not something that you have to go chase, which is super helpful. And then who can have it? So this question gets asked to me a lot, like who can use the VA loan? So the VA loan and its premise is designed for the military, active military person or veteran to use for their primary residence. You can purchase a home with you and your spouse. So that way, like your income is combined to help you qualify for more. You can purchase it, 2 veterans can purchase together, same thing, combine your incomes. And a surviving spouse can also use your eligibility. So if you got killed in action, or maybe out after the military service, maybe you passed away from something that was related to your time in service. Like, a lot of these Vietnam era guys got exposed to chemical stuff. And so they might have some reasons of passing away that are related to that. And if they can link it to that, then their spouse will have access to their VA eligibility unless they remarry. And if they remarry, then it's gone. But the one thing that you cannot do is you can't say, hey, my dad served in the Army decades ago. Can I use my dad's VA? And the answer is no. You can't use dads, can't use your brothers, or any of that stuff. It doesn't mean that you couldn't be on a VA loan with them. It just changes the dynamic, and then it introduces a down payment if a veteran and a non-veteran try and do a loan together. So the reason that the VA loan was even created was right after World War II, when the GIs were all coming back, right? We just had this influx of guys that were active duty fighting the war, and now they're coming back home, the war is over. And so the majority of them are gonna enter civilian life. So that's when Congress really designed and came up with the VA home loan, was to help those GIs buy a primary residence with nothing down. And so that was the premise of the whole thing, was to be able to put our military into a house with little or nothing out of pocket. So VA interest rates are lower than other mortgage types, like conventional loans and the other ones that you've heard of. And they're usually about 0.25% lower than some of the others. And today, maybe even more. The VA loans are really, really low rates. But the reason that VA loans have lower interest rates is a couple things. Number one, people who have VA loans have statistically the lowest rate of foreclosure compared to any other mortgage type. FHAs, conventionals, you name it, the lowest foreclosure rate. To a bank, to a lender, that's super duper important, right? Because the last thing they want to do is make a loan to somebody who then quits paying on their loan. So loaning money to someone using a VA loan is really secure for banks and lenders. The other thing is how the VA plays into all this. The VA actually doesn't lend a nickel. They don't do any lending. What the VA does is they guarantee the loan to the lender or the bank. They guarantee 25% of the loan. So just in case you were to quit making your payment, then the VA is going to come in and make the bank give them 25% of that loan to help make them whole. So the combination of the low foreclosure rate and the VA guaranteeing 25% of that loan translates into lower interest rates. It's almost like you have a 25% down payment. And so the risk to the bank is so much lower, they express that in interest rates. So that's why interest rates on VAs are so much lower. VA loans are available from local lenders. So It's not from the government, like I mentioned before. The VA doesn't actually lend any money. They don't take applications. You can't go to the VA website and fill out an application for a home loan. You can't do it. So, like I mentioned, the VA provides insurance, or they call it the guarantee. So you come to lenders like myself who can offer the VA loan and help you navigate it and have some expertise in it.
So I have two questions. So the first is, right now, what's a rate for a house on a VA loan in San Diego, ballpark, like good credit?
Good credit. If you're under 510 on your loan amount, then you're looking about 2.375, maybe even 2.25. If you're over 510 in your loan size, then you're going to be in like the high twos, 2.6 to 2.7.
Wow, that's incredible. So low twos to high two, depending on the loan amount. The other question I have is, your last slide, you mentioned that the VA doesn't do loans. And I think this is a huge misconception, because there's a lot of service members who want to go to, let's say, Navy Fed or USAA, and you name it, right? That sounds like a VA only type of company. Because I think in the past, people have told me like, oh, I'm going direct to the source. But what you're just telling us is there is no source. You can go to any bank,
right?
Because VA just insures it. They're not giving the loan.
Yeah.
Got it. Okay, cool. That's good to know.
Yeah, and an important point with that is, and I don't have a slide about it, I should make one, but the VA loan itself is actually almost individual to each lender. Which sounds kind of weird, right? You would think like the VA loan is just this blanket, same everywhere. It actually isn't. It's different from lender to lender. So each lender is required to just meet the VA's minimum guarantee standards. But if they want to add other layers of requirements on top of that, they absolutely can do it. The VA is not going to tell them they can't, make rules for lending their own money. The VA just says, make sure you meet our rules. So it is possible to go from lender A and not be approved for a VA loan and walk in the door to lender B and be approved for a VA loan. And that, I've seen that happen. It happens more often coming from the bigger banks to, the smaller, more independent ones like mine. And because of how they're set up and structured and stuff. But I'll give you an example. Some of the big banks have higher credit score requirements than we would have. So you could very easily have all your paperwork and just be super dialed in, go into big bank A, and they say, sorry, you don't qualify because of your credit. Come over to us, and we look at it and go, you're in like Flynn. Let's get you a house, So it can vary from lender to lender.
Yeah, and that's a good point, because I learned that lesson a couple of years back. VA buyer went to a lender, and the lender said, sorry, you don't meet the minimum requirements for a FICO score. So the buyer said, hey, Voltaire, we can't go looking because, I don't have high enough credit. I go, oh, really? And I start asking questions. What's your credit? They start telling me. I go, man, that sucks. And I happen to just pick up the phone, call another lender about something else. We start talking. I go, hey, what's the minimum requirement on VA? They go, well, ours is this, but, every bank's different. I go, oh, shoot. So I called back that buyer who basically kind of wrote off that they weren't going to buy a house anymore. And I said, hey, you qualify over here with this bank, which was cool. So that's a good point you bring.
Yeah, it's really interesting. Like the VA guidelines, you never guessed this, but like the VA guidelines they don't talk about credit score. Credit score is something that's implemented by all the lenders, but the VA doesn't care. The VA doesn't care if you have a 0 or a 500, it doesn't make a difference to them, but it's the banks that care, right? So interesting, it's an interesting little fact. So the other cool thing about the VA loan is you have really good opportunities down the road for utilizing it as a financial tool. And it's a really good tool for refinancing to take advantage of lower interest rates. And it's also a really good tool for tapping into equity to maybe go buy the next home with, right? And the VA loan will actually allow you to borrow more than some of the other mortgage types that are out there in a refinance situation. And So that's been really helpful for people trying to build up their, the real estate portfolio. In many cases, you can actually go up to 100% of the home's value when you pull out equity, where most mortgage types are going to limit you to 80%. So that's a big spread. You figure if you had a $500,000 home, 20%, that's $100,000 extra in equity that you could tap into potentially just by utilizing the VA loan versus another loan type.
Dope. And by the way, that brings me to something I just thought of. If anyone has any questions, because I'm sure you're going to have questions, just type it in the chat box, and then I'll be monitoring while Jason's talking, and I could relay those questions. So any questions, type them in the chat box, please, or raise your hand. Thanks.
Yeah, so one thing that's really awesome about the VA loan is it's really lenient on guidelines for like lower credit, bankruptcies, foreclosures. That stuff doesn't completely preclude you from getting into a loan and buying a house. It might have some impact on what the interest rate is or something to that effect, but it's not going to be a hard stop no. The VA loan is the most flexible loan product out there when it comes to credit, bankruptcies, foreclosures, all that stuff. Different lenders might have some different requirements there, but basically after a bankruptcy, the VA considers your credit reestablished after 2 years of clean credit. Many other loan programs require 3 to 7 years after bankruptcy. So VA is a lot shorter. Short sales and foreclosure, they really don't have a requirement unless it happened on a VA loan. Then it can get a little sticky. But it's a really great tool. Funding fee. So the VA has what's called a funding fee. And this can range depending on the VA loan that you're doing and how many times you use the VA loan. But it can range from 0.5% on like the VA refinance program all the way up to 3.6%. And that fee is financeable, so you don't have to pay it cash out of pocket. But that's what sustains the VA, right? That's what helps them pay that 25% if someone forecloses. But the other thing that's actually pretty nice that a lot of people don't know is the VA will help you out. So believe it or not, like I've had a couple clients who just fell on some hard times, right? Hours got cut at work and everything else. They weren't sure what they were going to do with this whole COVID thing. Everyone's talking about forbearance and this and that. And I said, hey, before you go file forbearance or any of those types of things, why don't you just call the VA? See if there's something they can do for you. So they called the VA. The VA made 2 mortgage payments for them to prevent them from missing a mortgage payment. So that VA funding fee, yeah, serious.
Oh, shoot.
That VA funding fee, even though sometimes it can be a scary, hairy number, it has a really good side cause that, I wouldn't offer that to every single person in the world that, hey, call them if you're behind on your payments. But if you can foresee you're coming into like some tough times, the VA is really helpful. They really want to help our veterans. They're not out there to get you. So, but that VA funding fee can also be waived, and you don't have to pay that fee provided if you're still in service, you have a Purple Heart, or if you're a veteran that you have a disability rating. And there actually isn't a minimum disability rating, just so long as you're making any kind of money. As long as the VA is sending you money of any dollar amount per month, then you're okay, and that fee gets waived, which is a super big benefit.
And we have a quick question, not to throw you off track, but are reserve members qualified for VA loans?
Yes, Guard and Reserve are qualified after 6 years of service without missing any drill dates. So I have seen guys and gals get pinched when they're coming on the end of their second enlistment and they don't plan to re-enlist after that. So they're coming right up on 6 years, and their commander says, hey, you know what? Don't worry about coming in on this drill weekend. I know it's close to Super Bowl Sunday or whatever. Just take the day off. You're good, blah, 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 right? So, the young military person's like, sweet, I don't have to go in on a Sunday. The problem with that is you have a points record in the reserves. And so for doing your 2 weeks active duty each year and making all your once a month weekend obligations, you're awarded points. And when you go to apply for your VA eligibility, if your points record isn't up to date, like you didn't make up that one that you missed, you're not eligible for the VA loan. So it's got to be 6 years and you got to have all your points.
Wow. Yeah, that's something I would have never even thought of. But that's where your experience comes in, right? So it sounds like you got to have perfect attendance for 6 years. That sounds kind of tough, but okay, cool. Thanks for answering that.
Yeah. And the perfect attendance thing, I was at a guard base, and the guard bases are super cool. So if there's ever like a weekend drill and you can't make it because you got, you know, a wedding or something you got to be at that weekend, oftentimes your commander will let you come make it up later. So like, yeah, you can't make it this weekend, but hey, when you get back, come to the base on Thursday and Friday and put in 2 full days and we'll count it. So usually they're pretty cool about it. But you know, each base and each command is a little different. One thing that I think gets overlooked, but it's a really great opportunity, are condos. So condos, you can buy a condo with a VA loan. There's a little bit more to it because we have to ensure that the VA has approved that condo complex, and we have a login in a search tool that we can determine that with. But condos are a great tool. They're a great property, especially in our area. Can help maybe save some money on purchase price a little bit. And we have the ability also to get a condo VA approved if it's not already VA approved. So if you found the perfect one, but it's not on the VA's list, as long as the HOA is willing to work with us, we can initiate the paperwork and get them approved, which is really cool. And there's a lot of condos in San Diego. So condos are a big deal. One of the other property types I'll mention too, that I really love to do and really like to teach people about are multifamily homes. So your duplexes, your triplexes, and fourplexes. They're amazing investment opportunities. And the way that you do it is, as the military member, you're purchasing it as a primary residence. So you have to occupy one of the units. So if you're buying a fourplex, let's say, you occupy one unit, well, you have the other 3 being rented. And those rents pretty much cover your mortgage. Plus you're getting VAH on top of that. So you're just stacking cash in that type of situation. The other thing that's really great about the multifamily thing is you can use the rent from the other units. So in this case, the other 3 units, you can use 75% of their rent to help you qualify. And that's super important because, you know, oftentimes, like especially in San Diego area, if you want to buy a triplex or a fourplex, it's going to be really expensive. I mean, it's over $1 million for one of those property types. And, you know, the average person in our area is not going to be able to probably qualify for, you know, $1.3 million. But when we factor in 75% of the rents from those other units, oftentimes we can get people to qualify, and now it works. And the awesome thing is once you PCS out of here, you rent out the unit you used to live in, and now that thing is a big cash flow machine, and you can start stacking cash and either paying the principal down on that or saving up for down payment on the next multifamily, your next duty station.
Yeah, I think that's a great point. Some of the richest people that I know, wealthiest people that I know, started amassing their wealth through duplexes and especially fourplexes. So if you could buy a property with 0 down out of pocket, and it's a fourplex, go for it. You know, and it's funny because people ask me sometimes, hey, would you buy it? And I go, hey, if a bank lent me 100% of the purchase price, I'll buy as many properties as I can. You know, it's no skin out of my, you know, no money out of my pocket, you know, no skin off my back. So I really love that. 2 to 4 units, I always preach that, but sometimes people feel weird about being a landlord or having tenants pay your rent. But hey, that's how you create wealth. George has a question. Is a townhome or a townhouse the same as a condo? So a townhome and a townhouse. So basically, everyone kind of has a different idea of what it is, but a condo, just consider it just like, let's say, an apartment, right? People above you, people to the side of you, people below you. And then a townhome, most people consider a townhome maybe 2 levels, 3 levels. So where you're You got the garage downstairs, the living room up, in the second level, and then maybe some bedrooms up. So, and then those townhomes or townhouses can be connected with the neighbors, but typically no one's above you, no one's below you. So that's the difference that I see. Sometimes you get something called a twin home. Some other people prefer to a townhome where it's 2 units right next to each other. So just imagine a 3-bedroom, 2-bath house, but stuck to another house. That's a 3-bedroom, 2-bath, and they look identical. Some people consider those townhomes as well. So at the end of the day, it's sort of the same thing because they have HOAs, they have common areas. So yeah, that's the difference on the definition. But when it comes to VA, I'm sure it works the same, right, Jake?
Yeah, it works the same. So they're financeable for sure with the VA loan.
I have a quick
Cool.
question since we're on this topic for Jason.
Yeah.
So can you break us down? So let's say, for example, a VA client purchases a 4-unit complex at $1 million,
Okay.
and they're gonna occupy in one. So if they're occupying one, how much do they technically qualify for? So they're gonna qualify. So each unit, more or less, of the 4 is gonna be about $250,000, right? And then you're saying there's an additional 75% of the rental income that qualifies them for potentially that $1 million mortgage?
Yeah, so they're not looking at it in breaking down like each unit with its own separate value because it's all one property. So, yeah, you're basically on the right path. So we can use the rent from those other 3 units to help increase your qualification. So typically how I'll qualify somebody who's interested in multifamily is I'll build up their file and I will approve them at the very max I can get them just on their own. So let's say I can get somebody up to 600,000 on their own, and that's their ceiling by themselves with their own income. And then we figure out how much rent they need for every 100 grand after that. And that's kind of how we build the approval for a multifamily. So in this instance, let's just say it's $1,000 in gross rent they need for every 100 grand they're over. So $1 million home, they need 4 grand in monthly rent gross to qualify. So we would find a multi-unit property that has that 4 grand of gross income. We can use 75% of that, which I've already figured will work to get them to that approved status on $1 million. Does that help answer your question?
Yeah, that most definitely does. So I was just trying to break it down, but breaking it down wouldn't make sense. And so you're just going for the whole unit itself, $1 million. That's the amount it is. So we'll work our way up instead of like, okay, well, there's 4 units and they're about 250,000 each. That doesn't make sense. So yeah, that cleared it up.
Okay, good. Yeah, it's a really it can get a little complex, but it's awesome. It's the best way I think to build wealth, and this loan will let you buy up to 4 units. So it's really cool. So there's more than 10 reasons to use a VA home loan. So we'll jam through a couple of the facts here beyond what we've already talked about. But it's something that you've earned, and it's a rare product because only a small fraction of the population has actually served in the military. So there's not a lot of people who have access to this product. And so we just like to really say thank you for your service and for defending our country. And by doing so, we take it on our shoulders, Voltaire and I, to help educate the rest of our industry on how great of a product this really is. And some people don't know much about it or have some incorrect thoughts about it, and it's our job to help educate them and present them with the truth on it, because it's not a harder loan to qualify for. It doesn't take longer. The interest rates are better. Oftentimes it's financially a better selection than the other loan products that are out there, especially compared to FHA. So it's something that we're really prideful of, is helping out our military and deliver this loan and get them into homes. So that's all I have. But I'm totally open for questions and stuff. One of the things I didn't talk about is your BAH. Your BAH is usable income for qualifying. So obviously that varies from duty station to duty station, but your BAH qualifies. In fact, we're able to gross up that number because it's tax-free money. So when I talk to people about, whether or not they're planning to buy a house or stay renting, the facts push so hard in the direction of you should buy a house. It's almost silly when you look at it. One of them is your BAH, right? There's money the government is giving you for a roof over your head, and it's tax-free. In our area, it's a pretty hefty amount. It's around $3,000, depending on your rank and dependent status and stuff. So around $3,000 a month here. The other thing is the government allows you to deduct your mortgage interest off your taxes. So your tax base when you're in the military is pretty low because you're only taxed on your rank wages, not the additional pays, right? So, if you're an E6, you're not getting taxed on E6 plus career C pay, plus BAH, plus BAS. You're not getting taxed on all that. It's only the E6 pay, right? So you figure when you're able to deduct mortgage interest from there, you're going to save even more on your taxes. And then thirdly is you're buying an investment asset, right? So this is going to appreciate in value over time. So you've got three reasons that are really swinging hard at you should be looking to buy real estate rather than living on base or renting. There's a lot of direction pointed in that way for it. And so when you start doing the math and really extrapolating that out into dollars, it makes tons and tons of sense.
Yeah, I 100% agree. Why do you think, Jason, is the number one reason you've seen why people don't use their VA? They rather rent when they're getting a BAH, especially.
I would say fear. I would say they're afraid of the unknown. A lot of people have that, like, ooh, I don't know what's going to happen next thought in their head all the time. Meaning, like, they'll get stationed here in San Diego somewhere and go, well, we don't know if we're here for 3 or 5 years. If we knew it was going to be 5, we would buy. But if it's 3, we're not so sure because what are we going to do with the house afterwards? And that unknown status can kind of corner people a lot and force them to like stay on base or rent at all these duty stations. Before you know it, 18 years of the military career go by. They never bought a house ever. And they're on their last duty station. They're like, oh, I think we'll live here afterwards. So then they buy a house 20 years later. I mean, 20 years of appreciation, tax deductions they missed out on, right? And so that's where like working with Voltaire and I really comes into play is the what's next piece, right? So our goal with our military clients is not to say, oh yeah, you qualify for $2 million, let's go find you a $2 million house. Like, that may not necessarily be the right answer, right? It might be like, hey, you can buy that, but let's think about the next step. Maybe we should buy something lower in price that we know will turn into a good long-term rental for you when you do PCS out of here, because it's inevitable someday, right? And then we put a strategy in place to help that next thing. But I would say a lot of it is fear of the unknown of what's next.
Yeah, it makes sense. Fear holds back a lot of people, right? Not to do a lot of things. So any questions right now, VA, for Jason at all in regards to loan and stuff? I know it's an important topic. And go ahead, Brian.
So I remember before there used to be a cap of how much you can borrow for the VA. Is that still in place?
Good question. No, so they actually removed that cap beginning January of 2020. So the beginning of this year, they removed it. And that was part of a bill that the president passed last summer, which was the Navy Blue Water Act. And essentially the premise of that bill was to provide VA health benefits to Vietnam and Korea era veterans. Though that class of veterans was not able to be treated by the VA for like chemical, Agent Orange things and stuff like that they went through while they were in service. So that act opened the gateway for them to receive VA health benefits. On the flip side of that, though, they realized that, hey, we're going to give thousands and thousands of people medical coverage now. That has a big expense, right? So how do we balance that? So the way they determined to balance that was through the VA loan. So they removed the cap, the county loan limit, and they also adjusted that funding fee. It's a little bit higher now than it used to be to help cover that cost. But that's how they did it, and it went into effect in January. So in theory, you can get a zero down VA loan for as much as you qualify for. So if you got, if you're in the military and you got a high earning spouse and you guys just crush it and make lots of money and you want to go buy, this place on the beach that costs lots of money and you qualify, you absolutely can use the VA loan to do it with zero down.
Oh, that's crazy. So even after, let's say if you become a business owner after the military and you're making good income, you qualify for that, like you said, $1 million place on the beach, you could qualify zero down.
Yep, absolutely.
That's insane.
Yeah,
That's
I'm
good.
helping an active duty guy right now. He's buying a fourplex up in the LA area. And just how I was explaining to you guys, right? We're using the rent from the other 3 units to help him qualify. And it's 1.3 million, zero down. And he got some seller credit to pay for the bulk of his closing costs on a $1.3 million place. So you think about that, right? Like think about the math on the equity gain. And I think of it like the stock market, right? Like if you had, $500 to invest in the stock market, over time you're going to earn interest on that money, right? And it's going to go up. Well, just think if that $500 was now 1.3 million bucks, and that percentage, if you do the math, right? 1.3 million times whatever percent, even a small percentage, say 4%, over time is going to be a big chunk of money one day compared to something smaller, right? So you have a lot of opportunity. It's really cool.
Yeah, that's pretty cool the way you broke that down, because it makes sense. The bigger asset you have, you just get that much more appreciation when you just take the simple percentage. So if you buy a $200,000 condo in San Diego, and then your buddy buys a $1 million condo in San Diego, if San Diego appreciates 5% every year forever, your buddy who bought $1 million asset, zero down VA or whatever, they're making a lot more appreciation than you are just because they have a larger asset. So if you buy a fourplex, it's automatically most likely going to be more expensive. So that's a good some good information you just shared. Cool. What other questions you guys have?
Yeah, this is Gustavo. How are you guys doing? All right.
What's up, Gustavo? Good to see you.
All right. Hey, so I've taken advantage of using my VA loan once, and then I made that loan into a conventional and reused my VA benefits again, and I maxed it out so for a second time. And I've actually have enough equity on the first home, and actually I thought, well, the VA loans are pretty good, so the VA loans are usually lower interest rate, as you mentioned, Jason. I heard before that in order for me to reuse my VA loan again, I would have to resell or sell both of my properties before I can reuse it again. Is that a misconception that you know of, or something?
Yeah, that is a misconception. So your entitlement can be restored. You can use it again.
Okay, so basically I can go ahead and make this VA benefit, that VA home, into a conventional again and reuse my VA benefits again.
Yep, you absolutely can.
Okay, great. Yeah, that's what I thought too.
Is that good news, Gustavo? Is that something you're gonna make a move on?
Yeah, possibly not hearing about this, because I'm actually in the process of possibly doing a VA refinance, but I have enough, when I first bought, and that's another thing, there's a lot of misconception up there. A lot of people, when I got out, from active duty, we're talking about my first time, actually 15 years, I did not know about the VA benefits. I actually ended up getting a conventional loan, and I went through an underwater loan, and it's finally about water, but I never used my VA benefits on that first loan that I got, because I didn't know anything about it when I got out. I wish I would have. Yeah, so I kept that house though, and yeah, so I'm, you know, if I refinance again, I may have a chunk of money on the first home that I use, and I can probably, like Jason said, maybe buy another property, maybe do a triplex or something like that. So it's a possibility. So that's a good way to know. Yeah.
Yeah, yeah, absolutely. Yeah, the military does a lot of good as far as training good leaders and great warriors, but the one thing they don't do well is teach us about the benefits we get because we served. And, you know, it makes sense why they wouldn't spend a lot of time on that, but it's a shame that they don't, because it's a really valuable tool.
Yeah, I agree. I keep hearing that over and over. George has a question. I read somewhere about VA loan disability benefits. What is that?
So what that is, if you have a disability rating, then the VA funding fee is waived. So the VA funding fee is what the VA collects on each mortgage to help fund the VA. So it's kind of tacked onto your loan when you purchase a home or you refinance. But if you have a disability rating, then that's waived.
Okay, cool. All right. Any other questions before we go into the real estate market update? Any questions for Jason in regards to the loan? Yes.
I do, Walter. So how does one qualify or get onto a VA loan with someone who's has a VA loan? If that makes sense. Or like let's say for instance, let's say my brother, he is active duty and he has a VA loan. Is there a way that I can get on that loan with him? Or is it just strictly him, or how does it get, is there a way to pass it on?
You can't pass it on, but yes, you could get on the loan with him. He'd have to refinance and add you as a co-borrower. I wouldn't suggest that, because what happens is when there's two veterans on a mortgage together, on a VA loan together, then we're doing what's called a joint VA loan, which splits your entitlement. So the entitlement piece of the conversation is kind of like the next level course, but the simplified version I can give you is it will reduce your personal purchasing power in the future using the VA loan. So unless there's some really strong reason why you want to be on it with your brother, I wouldn't suggest getting on it with him. It's not going to, it'll probably serve you worse than it would serve you better.
Okay. And then what about if Benny wanted to, let's say his brother has a VA benefit and Benny wants to buy with him, but Benny is in VA. Can they buy a property together using VA, or is it just husband and wife type of deal?
You can, yeah. So in that scenario, the way that the VA looks at it is, remember I told you guys earlier that the VA guarantees 25% of the loan to the lender. So when you have a veteran and a non-veteran and you go to buy a home together, the VA says, hey, veteran, we got your back. We are guaranteeing your pro rata share of the home with our guarantee. But non-veteran, you don't get it. You have to self-guarantee the loan. So if there's two of you, it's split in half. So half of 25 is 12 and a half, right? So the non-veteran in that scenario would have to bring 12.5% down payment to the table in that situation, because the VA is only guarantee the bet.
Wow. Okay. So just it doesn't make sense unless you have to do it, basically, unless
Correct.
you need it for qualification purposes. Okay. Cool.
Lower FICO thing, or really stretched out debt ratios, or some other reason, then other loan types would probably start making more sense.
And then what about husband and wife? Is that the same situation? The non-military spouse has to bring in a percentage, or no?
No. So if you're married, then there's no splitting of it. So total, they're both covered.
Cool. Perfect. All right. Great question. Any other questions? All right. So just let me share my screen really quick. This is just a quick market update. The market's hot. I'm sure you guys have heard, but we're at 31 days market average time. So if someone puts their home on the market, it's 31 days. Now it might sound like a long time, but in real estate terms, that's really fast. Anytime it's less than 60 days across the county, it's really fast. So this includes, the $5 and $10 million homes in La Jolla and Rancho Santa Fe, and the $400,000 and $500,000 condos in the rest of the county. So this is just an average. Now, they're selling fast, and the inventory is very low. So right now there's about 4,200 homes active for sale in San Diego. Same time last year, there's 7,300 homes. So the difference is about 3,000 homes. So meaning there's 3,000 less options to choose from if you're a buyer. So right now it's definitely a seller's market when it comes to selling your home. So if you're a VA buyer out there looking to buy, you're going to have a lot of competition when it comes to buying, okay? Because there's less choices. 7,300 homes last year compared to 4,300 this year. Demand is up 22% compared to last year. And then the average price home this year is $868. Well, this month, $868. Average price home last September was $695. So the difference is $173,000, which is crazy, right? Because in theory, it would mean that if you bought a home last year, your equity just shot up. Again, COVID kind of is messing with the numbers a little bit, skewing it, but it is a hot market. And then distress sales, there's 17 distress sales this month available compared to 40 last year. So 17 total out of 4,200 homes. That's not a lot of distress sales. So what is that telling us? That's just telling us, like, hey, if you're out there looking, for a deal or a steal, or you're just looking to buy only if you get the best, if you get a steal, it's not going to happen. That's not the market that we're in. However, with the very low interest rates available, especially to VA, it just makes sense to buy a home. Normally you look at these numbers, you're like, why would I even want to buy if it's so hot and competitive and prices are going up? Well, because it makes sense due to the very low interest rates. Your monthly payment, mortgage monthly payment, almost looks like a rent amount. It's so low. So anyhow, that's the market update. Any questions about the market at all that we could answer right now? All right. Okay, no questions there. So everyone, thank you very much for joining. Jason, it was a pleasure. You know your stuff for sure. I'm impressed. 18 years in the business selling real estate, and I learned something today. So thanks a lot for that.
You're welcome. You're welcome, guys. And if any of you guys have other questions, I'm sure something might jump into your head, at 2 in the morning tonight or something when you're sleeping. You can reach out to Voltaire or I, and we'll get you the answers. My website is valoanguy.us, so you can hit me there or anywhere social media. It's pretty easy.
Perfect. Yeah, valoanguy.us, and they'll find you there. If you have any questions, reach out to me. If you want me to connect you to Jason directly, reach out to me. And you're welcome, everyone. Thanks for joining. Have a great night. Happy Tuesday night. See ya. Take care.
Yeah, bye.
Guys.
All right. See you. Stop recording there.